Hello, 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 everybody. Welcome to this very special session. It's really good to see everybody here. Thank you so much for joining us to discuss a very important topic, which is how to launch a fund in Europe. For those of you that don't know me, my name is Mike Suprovici. I am the head of acceleration of Desal Group. Desal Group is a company whose entire purpose is really to help new and emerging managers thrive. Okay, we do this in a number of different ways. We do this through training. We run a very popular and what's become basically the leading accelerator for venture capital firms. It's called VC Lab, and VC Lab to date has launched over 400 venture capital firms worldwide. We do this through tools. We have a product called Desal Hub, which has become more or less the operating system for venture capitalists worldwide. And it kind of handles everything from all of your operations to fundraising to deals and things like this. Over 500 firms use that. We have a product called Partners, which is effectively fund administration. And we have a fund of funds called Desal Capital, right? And so like the way we sort of think about our role in the ecosystem is we want to sort of clear all the various friction points that new and emerging managers have. And, we thought we would host this webinar here today about how to launch a fund in Europe because we see quite a lot of friction in launching funds in Europe. It's very complicated. There's more regulations. There's more things to sort of watch out for to do so and things like that. And for those of you that don't know, we've launched over 100 venture capital firms in Europe, right? And so a huge percentage of the firms that we launched worldwide are in Europe. So we thought, hey, let's go ahead and run a session today to go into all of the various intricacies, to talk about everything related to sort of launching a venture capital fund in the EU. If this is your first time joining us, hello. I see some of you have already started to introduce yourself in the chat. Go for it. Please introduce yourself in the chat. But before you do not talk about like what you're working on, okay? Do not put your thesis in there. That's called general solicitation. Just say, hey, my name is Mike and I do this. You can put your LinkedIn profile in there. That's fine. No problem. Okay. Second, this is a very, very interactive session. These are designed to be interactive. Of course, I can go with the guests today all day, but really what you want to do is ask questions. There's a Q&A button at the bottom of your screen. I want you to ask questions. We're doing this for you, right? Not for us. And so as you sort of see questions come up over time, I'm going to ask you to do this over and over. Make sure you put questions into the Q&A and upvote them, and I'll go ahead and send them out to as well for everybody. Okay. All right, awesome. So let's go ahead and get started. Let's talk about launching a fund in Europe, a very, very popular place, a lot of activity in venture capital in Europe. So I couldn't think of a better person to have with us than Karola. Karola has been been very experienced at the sort of intersection of law, administration, and everything like that in the EU for a very long time. And she's the guest of honor for today. So Karola, can you please introduce yourself a little bit as well and maybe talk about your background?
Hi, everyone, and thanks, Mike, for having me here. So my name is Karola. I'm based in Estonia, in Tallinn, a very small country. And I'm a lawyer by background. And I have actually been specializing in offering services to fund management companies for the past almost 10 years. And when it comes to VC funds, then I have a company or a co-founder of the company called MITI, and we do offer like compliance services and fund administration services. But most importantly, we start with always analyzing where to set up the fund. And we do have the expertise here in Estonia, also have worked with Luxembourg, and we're trying to offer like a best solution for emerging managers to set up a fund in Europe. And yeah, for that, we actually have a cooperation partner called Finest Love VC Fund Management, and we will probably talk about this a little bit later as well. But happy to be here and answer all your questions with regards to VC funds in Europe.
Yeah, super exciting. And thank you so much for joining us. Really, really appreciate it. It's funny, there's actually already a question in the Q&A which is kind of where I'm going with this as well. Like so you mentioned 10 years, 10 years, a lot has changed in the last 10 years, right? Like a lot. Like we've had Brexit and all these other things, right, happen in sort of like the ecosystem. We've seen a lot of new, funds get launched, over in the EU. Can you maybe, talk a little bit about a little bit sort of some of these changes you saw, right? Like for example, like for a while the UK was kind of like a very dominant like domicile, but now because of that, like now managers have had to sort of scramble, look at Estonia, look at Luxembourg. Can you sort of talk about some of those changes that you've seen in your career?
Well, yes, it's been interesting, and actually, um, interestingly, like venture capital funds or funds that invest into kind of alternative markets, they weren't even regulated before, like
That's right.
yeah, 2011 it was, and after the crisis that happened, then the European kind of regulator thought that we have to regulate this as well. So this was kind of the first step, and it has been evolving since then. Like regulators put on more and more kind of laws and guidelines that you have to follow. So it's getting very complex. And yes, of course, after Brexit, then I think a lot of UK managers started to look towards Luxembourg, and Luxembourg has done a great job in like kind of marketing themselves for their deep place to go for fund managers, and yeah, still is, right? But also getting very complex and expensive. So, but yeah, I would say that still what is good in the EU, or at least in the European Union, is that we have kind of a harmonized legislation for setting up funds. We have the passporting options for funds that you can market more easily. So I think European Union has been doing a good job in a sense. And yeah, I am not so familiar with what has happened after Brexit in the UK, but I do know that a lot of them want to come to the Europe. So we are here to, of course, welcome them if they want to. But yeah, it's becoming very, very different.
Well, speaking of that, you just talked about like harmonizing, right? And like the EU's taken some pretty key steps in this. Maybe why don't we just start at the very like basic level? Can you maybe talk about what AIFMD is, what it does, and what its purpose is for everybody on the call?
Yeah, sure. So it's a European Union directive specifically designed to kind of regulate alternative investment funds and alternative investment fund managers, actually. So as I mentioned earlier, it wasn't regulated even before. We only had a different directive in Europe called UCITS directive, which only regulates kind of the funds, investment funds that you can offer to retail investors. They mostly invest in listed equity, very straightforward product. But we have investment funds that want to invest only in real estate. We have funds like that to venture capital, private equity, whatever. And this wasn't regulated. So that's when, after the crisis a long time ago now, the European Union thought that they have to regulate alternative investment funds as well. And it was actually also to protect the investors, because there wasn't any regulation that says that you have to have like something that you have to do some stress testing. You have to do even like know your customer checks on your investors, that anti-money laundering rules, conflict of interest. There wasn't anything you had to do. It was like very flexible. And of course, don't get me wrong, I'm not saying that right now in setting up an alternative investment fund is like super complex. It's just regulated and there are rules that you have to follow. But yes, for that, the AIFMD, this is the directive that we're calling it. This was kind of, it was adopted in the European Union, and all the countries have to adhere to it. Then if you hear a little bit shorter term, AIFM, this is about the manager, that like the management company of the fund. And even more shorter term, AIF is the alternative investment fund. So we are talking in a lot of terms here. But yes, the regulation is applicable in all the countries of the European Union. Every country, of course, a little bit makes some twists to it. Like in Estonia, here we have our own law. In Luxembourg, they have their own law, but general rules are the same all over Europe. This is what makes it great in the European Union.
That's super interesting. So let's double click on that, right? So you talked about AIFM, right? I assume that's more like a license of some sort or something like this. And if so, what kind of licenses do people need, and why are they so important to have?
Yes, that's a great question, and also I think that some managers maybe don't analyze well enough
Right,
before starting a fund.
right.
Because interestingly, the AIFMD, the directive, then it actually provides for several like levels of licensing you can actually get. And one should be very aware of what license to go after, or even maybe they have an alternative solution than to go after the license. So you can be fully regulated, like get the full management company license. Then you can basically you're like most flexible in a sense. You can establish very different kinds of funds, but also you are most regulated, right? You have to adhere to much more rules. And then there's a simplified regime that actually most VC funds in Europe use. It's called so-called sub-threshold regime. So if you're an emerging manager, you're managing a smaller fund, then you should definitely choose that option because it's the easiest to get. But of course, depends on the country. But the nuance there is that under the registration or the sub-threshold AIFM, then can manage investment funds up to assets under management of 500 million. So there is room for small managers, definitely. But if
Yeah.
it goes over 500 million, then one would have to go for the full license. And I mentioned the alternatives, of course. Also, another point to consider when establishing, I don't know, your first fund is that there are also a lot of service providers who offer like fund platforms, or sometimes they're called like fund hotels. So it's also possible to like go under an existing fund management company, an existing AIFM, without the need to go after your own license. So it very much depends on the needs and timeline, because if you go under someone else's license, it's relatively quick process to get your fund up and running. But if you want to get your own AIFM to become a management company yourself, then you have to go through a longer licensing process with the local regulator. And then comes in the question on where to get regulated, right?
Sure. Well, let's take a really quick step back just for the folks on this call. You know, obviously there's a regulation and people are trying to comply to it, but what's sort of like the benefit, or what of being an AIFM, like of having this license, like what does it allow you to do, from a compliance or regulatory perspective that you couldn't do without it?
Well, without it, you're actually not allowed to manage an investment fund. So if
Right.
you're doing it, I've seen examples of managers trying to kind of set up just a company, like a limited liability company, manage, invite investors into that and say that it's an investment fund. So that's not allowed. Yeah, of course, technically, if it's you only managing your own money, fine, you can do it through a company. But from the moment that it becomes like many investors pooling their money together and a fund manager investing it for the benefit of those investors, then it's an investment fund. And to manage that, you need a license. So that's the requirement part. But also what it allows you to do is it actually allows you to attract regulated limit investors as limited partners in the fund. That's one thing. Then depending on which kind of level of license you have, you could benefit from the marketing passport, so you can actually market all over Europe. This does not apply to the sub-threshold funds, but for others. So there are multiple things, and also you get kind of the level of trust in the eyes of your investors. This is what I see very often, that managers, they want to go and kind of invite very prominent investors as LPs into their fund. And if they don't have the AIFM, if they are not the AIFM themselves, or they do not have coverage of that, then the LPs will say that, sorry, but we don't understand under which regulation you are, so we're not interested because as we said, it's been now like more than 10 years that the AIFMD, the directive, is in force. And I think that being an AIFM has become kind of the industry standard here in Europe. So all the LPs know, like the term AIFM, they immediately understand what it means. They understand what it brings, and they understand that then under that they are covered enough, and AIFM is regulated. So there's also a little bit of protection on that side. So definitely without it, I wouldn't even see how you could be a VC fund manager in Europe.
And then, you also mentioned this, which is like some people want to do the license on their own. Some people want to use like fund platforms or fund hotels. Can you go a little bit more detail about sort of how fund platforms generally work or fund hotels work on like a very high level? So for everybody here that's a little new to this, or this is the first time they've ever heard of this.
Yeah, sure. So it's a very, very common thing to do, actually. Well, not for all fund managers, but how it works is that if you want to, as I said, first save time, or you just want to maybe test your idea or investment thesis, or you want to kind of generate a track record before you go after your own AIFM, then there's a possibility that you go under an existing AIFM who offers their license coverage to others as well. So it's not kind of, you don't rent their license, you can't do that. And still the AIFM under which you would go, they are still ultimately liable. So they will have kind of, they have to have some oversight and some veto rights over your fund. But it's still useful to consider if time, money, and it's your first fund even, then the track record is important, right? And how it works in practice, if we like visualize a fund structure, is that then the AIFM remains the management company of the fund. Let's say if I'm the fund manager who actually wants to establish the fund, then it's still like my fund. I'm the initiator of that, but I outsource the management to the AIFM, and then I have a separate company that becomes a general partner in that fund and has all the investment decision-making rights. So normally those platforms work like you agree all the details in a fund management agreement, like about how you cooperate. And in practice, well, as I said, these structures are pretty well established in Luxembourg. Now even more, we're going there in Estonia as well and other jurisdictions. And as I said, I think it's worth considering if those arguments are necessary. And usually, of course, if you think about the costs, then yes, it's the fund manager would have to pay something for the use of that fund platform. But at the same time, you kind of save all the hassle of going through the licensing process. So it very much depends on what are the needs. But it's and also another aspect is what I didn't mention is all the back office work, because for all the investment funds, you have to do fund administration, some compliance, regulatory reporting. So normally those fund platforms or fund hotels, how you want to call those, they offer full service. So you don't need to hire your own personnel for that, and just focus on your investment analysis and investing.
There's actually a question in the chat, and it's like, what's the easiest way to launch your own fund in the EU? Well, Ivan, this is the easiest way to do it, and it's also the most cost effective, which is why we're working with Finest Love, with MITI as well, to together to sort of launch something that's cost effective and makes sense for alumni of the VC Lab program because it's been just such a huge struggle. But before we go any deeper on that, can you maybe talk? You mentioned like the approval process, the process of actually getting like your own license and what you have to go through. Can you talk about like how long that takes, what's involved in doing that?
Yeah, it very much depends on which EU country you're going
Fair
to
enough.
decide to apply. So I can say that in Estonia it probably will take you at least 6 months to get the sub-threshold AIFM registration. And also there are rules that you have to have a local management board member, at least one, and so you kind of need to do the substance in Estonia exercise. But I know that it's very similar, I can tell you, in Luxembourg as well. The local director's requirement and all that. And it might be faster in Luxembourg, but it's much more expensive. So that's another thing to consider. But yeah, in a nutshell, the process is similar in all EU countries, that you have to do an application, you have to present them that you have like internal control systems in place, that you have internal rules, a set of those, you have your kind of AML and KYC processes in place. You have to prove that you are competent enough to act as a board member in a regulated entity. And usually the process goes that once you submit, then the regulator starts asking you a lot of questions, because they just want to verify that you are actually serious about what you want to do, and you actually know what kind of laws and regulations apply. So yeah, they want to verify that you are a fit and proper person to manage a fund.
Yeah, and if you just sort of think about where they're coming from with this, right? Like, I mean, it's pretty easy to see how one of these situations could turn into like fraud or whatever, right? It's just because you're
Yes.
managing other people's money, right? And there's a lot of like opportunity for that, right? And so they just want to make sure that if they're going to give you this license and give you this stamp of approval and say that you are in fact like legit, like you're going to have to go through a process of approvals to make sure that everything's sort of set up correctly, you have proper compliance, that you're institutional grade in many ways. So that's why it is the way it is, right? And so it's coming from a good place. I mean, we can debate like, like how hard or whatever, but like the bottom line is that the intent is pure, right? It's coming generally to make sure that LPs are safe in investing in these funds, right? And so it's important to have that, and but that being said, most new and emerging managers are generally not raising that much money because they can't, because they don't have access to those types of limited partners. Most new funds are like 5, 10 million, 15 million euro, maybe 20 million euro. And so therefore, then you start running into issues with regards to making the economics work, Karola, right? And so it's like, how do we make like, so you just talked about a very time consuming process. There's obviously time and money involved in that, but there's also the process of like running these firms. We sort of discussed the issue with Lux, and you don't have to say this, but I'll say this, like Lux is like prohibitively expensive for pretty much anyone trying to start a new firm in Europe, right? Because it's going to start at 100,000 euro just in legal costs. And that's if everything goes right, not if everything's, and usually that never happens, right? Because there's changes you want to make and things like this. Plus, there's also lots of like what I would say administrative like burden, right? Which then it makes it so that you have to spend on a yearly basis somewhere between, like up to 100,000 euro just in compliance work that you need to do. So then what ends up happening is that it just doesn't make sense unless your fund is, I would say, I don't know, 50 to 100 million euro, and you can actually raise that. But the problem is, right? The problem is that most LPs that you would need to raise 100 million euro do not invest in new and emerging managers, except for maybe like IMF or whatever, like that kind of level, like there, other than some of the government programs, right? So if you sort of want to do this and run a small fund, it becomes incredibly difficult, right, to sort of make this sort of work in Luxembourg, right? So historically it's been a really challenging situation, right, until but I would argue like Estonia came around and very innovative kind of approach and started trying to work through this and sort of bring the cost down to make this sort of work, which is also why we're trying to work with Finest Love to sort of get this cost under control for you to make this work for everybody here. But I'd love to get your views on this, right? Like you've operated across, you've seen this in Lux, you've seen this in Estonia, you've seen this in other areas. Can you maybe talk about like sort of domiciling your fund, why that decision is important, and any sort of context you can give people with regards to maybe some of the benefits of Estonia?
Yes, of course. And I think what you said about Luxembourg is completely true. And of course, I'm not saying that it's a bad place to go, not at all. I have done a fund merger there as well, and it's a very good place in the sense that they have all the systems in place. They have developed themselves as a fund management kind of center, and they have the service providers. But they are getting very crazy expensive for smaller funds, and it just doesn't add up if you do the math, right? When you're doing a budget for your fund. And that's why I think it's good that we are now having kind of alternatives. And also what's happened in Luxembourg is what I've seen, that they have so many different fund structures. And actually I've seen kind of one example where they gave kind of not so good legal advice to a fund manager, and they ended up choosing a structure that required like all that depository and custody, which actually wasn't necessary. It was a simple VC fund. And so, yeah, there are mistakes to be made as well. Maybe it's becoming even too complex. But yeah, talking about Estonia, so why I'm actually saying that it's a good domicile is not only because I'm from Estonia, of course I love Estonia, but I think Estonia did a very smart thing. Actually, it was 7 years ago now. We didn't have any kind of legislation for VC funds. We only had an Investment Funds Act that just regulated like investment funds, but there was nothing specific to kind of VC or kind of closed-end funds. So what Estonia did, actually, they just reviewed what others have done. They checked and analyzed Luxembourg and Guernsey and lots of other jurisdictions, and they basically copied what was already done in Luxembourg. And they introduced into the law a new kind of fund type. It was the limited partnership fund, and it was specifically designed for this kind of risk capital funds, venture capital funds, private equity. And yeah, it's still in place today. And I think it's a good alternative to consider. Of course, if you're analyzing where to go, it always depends on the fund manager's LPs, right? Like some of the LPs, if you're a bigger fund, you have like very prominent LPs, then they might not know about Estonia initially. They say that, no, we want to go to Luxembourg, no other option. But I think it's changing as well, because in Estonia, the good thing is that, as I mentioned, like the legislation is there, the processes are there. Now we have service providers as well who kind of offer these kind of fund platforms as we do with Finest Love, and in cooperation with you guys as well. And also this limited partnership fund structure in Estonia is should be very attractive to LPs, because it's pass through, it's tax transparent. If you start fundraising anytime in the future, this is definitely your LPs will ask, is it tax transparent? It's super important. And also business-wise, Estonia is very digital, of course. So if you want to start a fund in Estonia, I suggest you would become an e-resident as well. You can do the business operations all online. So there are many perks to that. And still, you can, of course, you need to have the fund host, so to say, in Estonia, if you would want to set up in Estonia, someone like Finest Love. But your general partner company, you could keep elsewhere as well. And one other important thing I think to keep in mind is that it's very flexible in terms of the fund structure. It's flexible because kind of the law doesn't say where you can and cannot invest. You have to agree with the LPs. It's very flexible. Whatever you agree in your limited partnership agreement. Of course, very important is to satisfy the regulator as well. So I'm not saying that go crazy and do, I don't know, only crypto funds or whatever, but it's still, yeah, you have a lot of things that you can decide as a fund manager. So I think that's very important.
And it's also more efficient and less expensive, right? And so again, you need to make the math work because, again, you're going to be charging a lot of these costs back to the fund. They're called fund expenses, right? So, every dollar that you spend on operations is an opportunity cost, right? And so if you just sort of think about like what, I don't know, 25 or even 50,000 extra euros a year does as far as like an opportunity cost, well, that's like a €500,000, right? That's like 3 deals for a lot of people, right? That's like a pretty significant opportunity cost right there that you got to sort of think through. So you want to sort of make sure that the math works out in everyone's favor, which is also another thing to sort of kind of think through this. And good LPs and smart LPs understand this, right? So we right now, just through our LP Institute program, where we're training limited partners on how to invest in emerging managers, we're doing roughly 50 to 60 LPs every single quarter. They're realizing this too, right? They're not so caught up on like domicile as much as the fact that they want it to be in one of the major ones, right? Because when you have a major domicile like Estonia, like Delaware, like Lux, there's just enough service providers there to create a healthy market where you just don't have this issue where it's like, can I find a service provider and they can charge whatever they want because there's not that much in it, right? There's not that much competition, so just something to sort of think about. All right, we have 18 open questions, Karola, and roughly about maybe 25 minutes to go. So I'm going to go ahead and flip over the Q&A here as well because there's a decent amount of questions here. So there's one here. What's your point of view with regards to setting up a fund in Europe that that obviously wants to perform well for its limited partners? And Praveen, I'm paraphrasing this, uh, but it's investing in a different place. In the case of Praveen, they want to actually invest in like a market like India or something like this. Can you talk about that? Can you talk about, is there any sort of complexities that they got to think about if they're sort of not going to necessarily deploy the capital in Europe, but they want to be domiciled in like an Estonia?
There are no like certain limitations to it. So definitely a VC fund in Estonia can invest wherever, as long as it adheres to the investment rules in the LPA, and also then the AML rules come into place. So I know VCs who are set up in Estonia who have invested in, well, US is very common, some Asian companies, but it comes down to if your LPs agree to it, and also the investment company or the portfolio company where you want to invest, they have to pass all the AML rules, that they cannot be like a high risk third country or sanctioned or something like that. So in a sense, yeah, jurisdiction itself doesn't matter. It's it matters whether it's allowed, and it's and your LPs agree to it.
There's an interesting question here, so it's about basically like how does domicile impact exits, right? So they have exits, they got distributions, they got to send them back to sort of LPs. What are some like the long-term considerations that LPs should sort of think about, especially as if a manager is trying to make a case that let's say Estonia is a good place for them to put their fund?
Yes, that's a great question. And exactly for this reason, I mentioned this pass-through earlier. And for this, the Estonian structure is very good because the LPs always want a pass-through structure. Because pass-through means that once the fund can distribute some profit to its LPs, then the fund doesn't deduct any taxes. The fund is not a taxpayer in Estonia. So basically what the fund does, it pays out the gross amount to LPs, and each LP itself is responsible for their own taxes, wherever they are tax resident in. So it is a very important argument, I think. And I know that some countries in the Central Europe, where they don't have actually a good legislation or regime for VC funds, then it's becoming a problem. And that's why many of those VC funds actually also are looking for a new domicile. And so far they have ended up in Luxembourg paying a lot of money, but hopefully in the future they will have alternatives.
Or some of them are just unclear, right? And then
Yes.
that creates even more confusion. And now you have to sort of go through all this pain to sort of try to figure it out with the LP together. And everyone, just taking a side note here from a business advice perspective, never, ever, ever give tax advice to your LPs. That's not your job. All right. Like if an LP is asking you, like Alex is asking, are there capital gains taxes in Estonia? Your answer should be consult your tax advisor. Okay. It's not your job to provide tax advice. And no matter what we say here on this webinar here, this is not for you to be like, oh, well, I just was on this webinar. And so I learned this. And no, because everybody has complicated tax situations. You don't know if that LP has entities or whatever in that country or what that affects. So taxes are super complicated. So never, ever, ever do that. That being said, most major domiciles, right, where funds have sort of clustered to, they clustered there for a reason, and it's generally because they support the sort of pass-through option where basically LPs pay taxes in their own country wherever they are, right? And it's not really there's there's no capital gains, right? There's no capital gains in Delaware, right? Unless you happen to live in America or something. But if you're like in Europe, like the same thing with I would say Estonia. But correct me if I'm wrong. Are there any capital gains taxes in Estonia, Carol?
Currently, no. We only pay taxes once you pay out dividends. So actually, until that time, there are no capital gain taxes.
Exactly, exactly. And this is why with VC funds, right, this is super important as well. And this is where there's questions about crypto and stuff. This is where crypto kind of runs into some issues, right? With VC funds, how would you invest in the startup, you hold the asset for 10 plus years. For all you pre-seed people, it's probably like 15, even though your fund is 10 years, just because it takes you a long time to exit, right? And then there's an exit, and then you send the money back, right? And when you have transactions happening through your fund, like whatever, whether there's dividends, whether there's like trading in and out of crypto or something like this, that's when it becomes more problematic from a tax perspective, because now you got to start thinking about how to deal with that. But with VC, you don't have to worry about any of this stuff, because again, you just distribute in 10 years, and that's why it's very efficient and it works really well. you know um, there's a question here from Yvonne, and I think this is a pretty good question too, is like, what's the benefit of advantage of a manager setting up a fund in the EU? And again, let's assume that they are generally in Europe, which most of this call is. What's like the benefit of them setting up in the EU versus, like, I don't know, somewhere else, maybe like a Delaware or Cayman or whatever the place may be?
Well, what I've seen in my practice, it also depends on where your LPs are from. It's of course for EU LPs from EU. Of course, they can invest in Delaware funds as well. They can invest in BVI, Cayman, wherever. But what I've seen in my practice, often they say that no, for tax reasons, I prefer Europe, because probably it's more understandable to them how to do taxes. They don't want to start filing anything in the US. Well, sometimes they don't have to when they're in the Delaware fund, but yes, this is again, like, sometimes just if you're raising a fund, your LPs will tell you a lot what they want, and unfortunately or fortunately, you have to kind of satisfy them. And also well, I have like some experience with Delaware structure, but it was I have done it only when it was set up like a feeder fund, and the Delaware was set up exactly for US investors, and the master fund was set up for EU investors. So usually it comes down to that, where are your LPs from?
Yeah, exactly. And the other potential advantage too is that it may allow you to access public funds, right? That really just are trying to sort of promote like more VC funds being started in Europe and things like this. And they generally like seeing a domicile, obviously, on the continent somewhere, right? So just something to kind of think about as well. So that's probably another advantage too. Um, you know, do you need to become AIFM compliant as a VC fund living in Europe if you're planning to structure the fund somewhere else? This is a difficult one to answer. Like, let's say, like, I'm just making this up, Cayman, right? This is a kind of a tricky one, right? Just because they might not be in Cayman, but maybe they still need it potentially to AIFM. I don't know. What are your thoughts on this?
No, I actually have helped set up one fund in BVI, and
Yeah.
this one has an Estonian company as a general partner, and the Estonian company is not an AIFM. So the rule here is if you manage a fund outside of Europe, then you don't have to be an AIFM. But vice versa, there are rules. Then you have to apply for something in BVI. So
Yeah, exactly.
that's my experience.
All right. So Connor's asking it's a little bit of a loaded question, but it's a good question for us to go over this. So basically saying, hey, look, some people say that AIFMD has reduced the competitiveness of EU-based VC firms. Can you give some specific examples of some of like the burdens that AIFMD creates and any way to mitigate against the challenges with good planning ahead? We definitely can talk about mitigation, but like obviously the compliance work is much more significant, right? Like I would say that's a pretty big part of it, but I'd love to get your views on this.
I would say that it's not so much the AIFMD that's causing the burden, it's the AML rules, like the anti-money laundering rules that's becoming, and of course we need those rules, so don't get me wrong. I of course sometimes get frustrated, like why there are so many rules, but we need AML rules, of course. And what happens is that if you're an AIFM or a fund manager under whatever license in Europe, then I would say the AML rules are a little bit more strict or burdensome compared to Delaware, let's say. The process that you have to apply for LPs, it's pretty detailed. So maybe that I do agree that it might seem like a burden sometimes, but at the same time, as a fund manager, you really have to know who are your LPs, right? You don't want to take any shady money, because otherwise even if you got the AIFM initially, you will not get it again if you onboard an investor that doesn't kind of pass the KYC AML checks, right?
Exactly. And then it's especially now with sanctions and all the stuff that's going on too, like, your bank account just might get shut down, right? Just because like you have accepted an LP that was sanctioned or whatever. And now all of a sudden, like the bank's like, I don't want to deal with this, right? So it's not even I mean, it's more, that's more treasury and banking, but still like there's pretty significant things to kind of think about there as well with that, right? So yeah. There's a question here is where should you set up a crypto native fund? Any views on this? It's really hard right now, Alexander. Just I want to tell you this because we're trying to crack this for you all everywhere. Like even BVI is pretty hard, right? But I don't know. Love to get your views on this.
I can't give any advice here, so I don't know. But I'm not a. I've also heard that the BVI is one BVI and Cayman, because apparently they are very suitable if you want to invest into crypto or into Web3 startups even. That's what I've seen in the market. So yeah, but in Europe, I've heard people discussing the same thing, like where should I set it up? And they've been looking at Switzerland, Luxembourg, even Germany, I think. Yeah. So it's a tricky one. I agree with you.
Yeah, so you don't actually have as much of it's not as much of a domicile issue that you have. Just to be frank, you have a banking problem, right? Because a lot of banks just don't want to deal with this, and even the crypto friendly banks have not become so friendly lately for various reasons across the world. So even if you sort of set up in BVI, which again is why we have BVI as a domicile, by the way, is because we're trying to help your community sort of thrive. The issue you have is the banking infrastructure, and you do need to deal with like you do need to take money in actual money, not like crypto money, right? For pretty much any sort of regulated fund, right? So even if you do invest in sort of digital assets, you need to provide distributions in euros, right? You need to take euros in, like you can't take like tokens and stuff like that as investment to sort of do this right. And so that becomes an issue at the banking layer. So just something to kind of think about. That's where you're going to run into most of your issues. There's a question here from Kohei. Sorry if I mispronounced your name. it's about basically the SCSP, the Special Limited Partnership in Luxembourg. And what they're saying is that it's an unregulated fund structure which doesn't need AIFM license. What's your take on considering on always considering an AIFM versus sort of an unlicensed structure, and especially for small funds like 10 million?
No, definitely. I'm not saying that you need to go to the AIFM always, and for this reason, we also kind of have the option to go under someone else's license, and it's not even a license because the sub threshold one in Europe is actually it's a registration. So probably I'm not an expert in Luxembourg law, of course, but I've heard of the structure. But it still should be an AIF, so I assume it's also registration. So still, it's a simplified process. You don't get fully regulated, and you can operate in a more simplified manner. I think it works. It comes down to costs probably, and under like how up until what level can you manage your assets under management. So I mean. If it's an AIF, then from the LP perspective, I think it may be the same. But yes, what I've seen, like LPs always they want the AIF at least, and if it's possible, then the AIFM, then they know the structure. But I know that and agree with you that in Luxembourg there are so many fund structures. So there's a specific one for only real estate funds, for example. So they have something for everybody. But it always comes down to how much does it cost, because you need a different service provider for every like operation that you have in Luxembourg. So
Yeah, so
probably
I agree. And the decisions that you make there could create way more complexity for you down the line. So the key is to sort of reduce complexity as much as possible, which is why we're obviously you and I are both in agreement. That's why we're working together on this. Is if you see our legal docs and all this stuff, we try to sort of like always reduce complexity. And sometimes when you pick a structure that sort of maybe seems appealing in one area, creates all this extra burden in the back end and makes the operations of this not work well, right? Or be so expensive and cost prohibitive that doesn't work. My advice to you though is maybe from a business perspective to think of it like this. It doesn't make any sense for you to launch a fund, right? You need to build an enduring venture capital firm and have multiple funds under management for your business to work. So whatever you do in fund one, every decision you do in fund one is going to affect fund two, and every decision in fund two is going to affect fund three. And the LPs are going to diligence all the funds across the board when you get to fund three. And so you want to be institutional grade from the beginning. This is not the place to sort of cut corners. There are ways to sort of like make things more efficient, kind of like what we're discussing here now to try to do this right. But if your goal is to basically build an enduring venture capital firm, set it up correctly the first time, because you trying to fix that in the future is going to be so much more cost prohibitive, and you might not be able to fix it. All right, this happens a lot, right? And so just set things up correctly from the beginning. So just make sure you make the right decision there from the start, and don't try to cut corners as much as you can. There's an example here, or a question which I'm going to paraphrase this. You mentioned that there's like obviously multiple countries. How do regulations in various countries in Europe sort of affect the manager that's like trying to operate, let's say in Estonia or something like this? How should they be thinking about that? The various countries and their various regulations.
Yeah, well, as I mentioned, what's good in Europe is that like the AIFMD, if we talk about the directive, then it applies to all EU countries, right? And of course, each country adopts the directive in a little bit different way. So you have to like choose, or you can choose actually between countries. But I think like both Estonia and Luxembourg have done very well is that they don't generally change very much. If these countries adopt the European law, they just basically take what's said and change very little. But there are some countries who want to over-regulate, and it takes years to apply this directive, and so it gets crazy. But in a sense, why it is good to operate in European Union is that you have similar rules in each countries, but of course you have to know. For example, like I know in Germany, probably the regulator is pretty strict, much more strict than in some other EU countries, and it very much depends. They might issue more guidelines. Estonia and Luxembourg regulators have different approaches, but it only it only becomes a question for you if you want to do like local marketing, actually. So if you just let's say you set up in Estonia your fund, and your investors approach you, you find your LPs in a different way, then you don't have to do like marketing, you don't have to do like private placements in other countries, in a sense. So in that sense, it doesn't really matter their whole regulation. But if you want to operate in multiple countries, let's say you are like a licensed AIFM, then you can actually benefit from the marketing passport in Europe, because it applies in all countries. You can market your fund in all countries. So yeah, in a sense, it's pretty harmonized, but you always have to take into account that local rules may be different.
Makes sense. There's a question here about like, well, and I'm happy to help here. It's like if we launch a fund in Delaware and we want to deploy all the capital into EU, does all this conversation still apply? And this is why I kind of waited to ask this question, Fabio. I know you asked it a little bit earlier. And it's kind of, it depends. It's one of those kind of answers, right? It sort of depends on how you're raising capital, who your LPs are, how you're sort of thinking about like deploying and things like this. So it's kind of it depends question, but generally, you're going to operate under Delaware law, if that makes sense, and that there's some benefits to that, and as well as some disadvantages for some EU managers. Okay. How does this compare to setting up a PIF in Malta? And she's referring to the Estonia. Any comments on Malta and as a PIF?
So I'm not aware of like many VC setting up there. Yeah, so I cannot really comment what's the difference. So yeah.
I'm happy to jump in on this. Look, Malta is not a major domicile for funds. Okay. And that's a problem for lots of reasons. That's a problem because you don't have enough like vendors to sort of bring the cost down. So this is sort of what ends up happening as well for like islands and island nations that kind of sort of start specializing in like the fund business, so to speak, is that you start getting a lot of corruption and things like that happening, and therefore costs kind of spiral out of control. Mauritius is like this. Cayman was like this for a long time, and now it's become very expensive, almost prohibitively expensive, because the EU kind of came down pretty hard on them. So it's just not really a major place to sort of do business, and therefore like all the things you got to do in the future are going to be sort of affected by that long term, right? So that's probably one of the main issues that Malta has, amongst some other things as well. There's let's see here. There's basically a question here, which is, and this is, I think it's a really good question for us to sort of wrap on. Like, it's basically like, what advice would you give, emerging managers that are starting right now, right? They're thinking about this. They've assumed that they've probably been in one of our programs, so they've taken our advice about like not going crazy on doing research on this until they have enough hard circled commitments from limited partners to actually start this process and invest the money and the time to sort of get this done. What sort of advice would you give them as they start on this journey to sort of set things up possibly in the EU?
Well, I think definitely don't start from establishing the fund from day one, right? Start kind of negotiating or talking to LPs. What do they expect? Let's say if you have a plan, you have analyzed that you want to establish in Estonia, that's great. But what I suggest always is that do those things in parallel. So talk to your LPs, and in parallel, you can start working on kind of establishing the fund structure. But the problem would be if you, let's say, you go and, I don't know, pay 100,000 euros to someone in Luxembourg, you create a fund structure, and then you're like, okay, my fundraising is not going so well. So do those in parallel. think about it early, but have a plan for your LPs as well. I think the choice of where to domicile is very important because, of course, as I said, often your LPs will tell you that, yes, we want Luxembourg. No, Estonia is okay for us. But sometimes they won't, then you have to have a plan. Because if you go to them like, yeah, I'm thinking about setting up a VC fund, I'm not sure yet where. So then probably that's not a very good solution. But just do those things in parallel and always know how quickly you can set up the fund. Because if the fundraising goes extremely well, then you should be able to establish quickly. So then comes the thing that you should be able to either like go under someone else's license and establish very quickly, and then I think your LPs would love it because they don't also want to wait a year until you go and get licensed somewhere, right? They might have new plans by that time.
I'm so glad you brought that up. And this is, one of the biggest issue with many domiciles. It can take like 6 months and licenses and stuff like this to get set up. Singapore is like a year, right? And so like, okay, you got everybody sort of excited and they're ready to go. And one of your LPs is like, I want you to do X, right? And then you're like, oh, you start learning about this, right? And then time is the enemy of all deals. So get the commitments, everyone. Do not invest money into this until you have the commitments. This is very expensive, no matter how you slice this, right? And so just make sure that you get the commitments. And then once you do that, we're all here to help. We're going to be doing lots of these webinars. Carol and I are going to be doing a lot of these to try to help you all. So whenever you're ready, we're happy to kind of give you more custom advice as you get started. So Carol, thank you so much. I learned a ton from you from this call. This is really, really great for me as well. So I really appreciate you doing this and really appreciate you giving back to the community and helping everybody here. Thank you so much.
Thanks for having me and good luck to everyone, and happy to answer your questions afterwards as well.
Perfect. Bye, everyone. Bye.
Bye.